Okay, guys, thought I'd try something new than rather just sit around and tell you guys we didn't want to wait for a few people. So we're going to get right into it. All right, that's the, we're going to start looking at some of these charts, and hopefully everyone's having a good Saturday morning. Let's try to figure out where we're going for the next week. Okay, guys? So go ahead and if you're new to the live stream, then just drop a stock pick or a chart you want me to look at in the comments, and we'll just start digging into the charts. We ended the day on Friday. The market sold into the close. I was watching it dump into the close. So we'll see. I think we're probably going to get that gap down on Monday. Just kind of a gut feeling there. But I do think, we're probably going to gap down. A couple things I'm watching. This is the weekly chart here on the triple Qs, and you can see how we closed the week. So we closed the week with it, inside of my trend line that I'd really been watching. And that is right here marked in red. So if I roll out, just show you guys, that's this upper channel. All right, so this is the bull market. If you don't have this marked on your chart, mark this out on your chart. This is the bigger picture stuff. And we, right now, we've got bigger picture things going on. All right, the market is not the market that it's been for the last, at least 20 years, but really for the last about 40 years. So the market is in a major transition period, primarily due to interest rates. So that's why we're seeing inflation. Most people alive today only experienced inflation, back when they were in their 20s. All right, I know my parents basically were just starting out when that inflation was really kicking off in the 1970s. And you've got a lot of people, a lot of financial advisors, they've never experienced inflation. So the fallacy that the market always comes back, that's a fallacy that when you basically if you invest, the market always comes back. Invest for the long term, and yeah, I think it's a good idea to invest for the long term, but that's a fallacy that if you invest for the long term, the market always comes back. If you go and if you look at the market, and I just want to point this out, if you look at the SPX, and if I roll way out, I think I have to go quite a ways back. Well, this one doesn't even go. Sorry, can't even show you there. But if you go, if I looked at another chart, you can see that the market, like in 1929 when you had the Great Depression crash, the market didn't break even for about 20 to 30 years, I believe. And then, back in the 70s, the market just went sideways for 10 years. And if you look at charts such as like the Japanese Nikkei, they had a market peak in 1989, and then the market has never been back to those highs since 1989. Okay, so, and that's just the stock market. That's people trading, financial instruments. It's fear and greed. It's just, there's no difference essentially than the U.S. The one difference, I guess you could say, is the U.S. has the reserve currency. But the point that I'm just trying to make is markets don't just necessarily come back. And as we roll into, the time frame that we're in today, this is the market that basically pretty much most people alive have dealt with. All right, and they, this is the fallacy. This is why there's a fallacy that the market always comes back, because in the dot-com bust, it came back. We had a couple years of decline, and then the market bounced back. In the 2008 Great Recession, it bounced back. All right, this is Fed intervention. Fed. All right, and then recently, every single little drop. 2018, Fed. 2020, Fed. All right. Now the Fed has. Now we've pretty much got runaway inflation, guys. I mean, the point is that you're running 40-year highs in inflation. And they don't even count. That's even a fallacy right there. That's basically a lie. So they don't calculate inflation the same way that they used to calculate it back when there was actually inflation in the 1970s. All right, the 1970s was the last period of inflation, and they completely used different calculation to calculate the CPI. So they're using a modified version of that. If you use the same version that they used back then, this is the worst inflation the United States has ever had. Okay, so we have runaway inflation, and the Fed has to do something about that. I mean, they literally have to. So the point is that the markets have crashed in the dot-com bust, and the Fed stepped in and cut rates. In 2008, they cut rates. So the Fed's been there for 40 years propping up the market. And that's what's created that fallacy that the market always comes back over the long term. Because the reality is that you've had a Federal Reserve creating stimulus for the baby boomers who are, in their 60s and maybe a little older, but their entire life has basically been there's been support behind financial instruments, real estate, and the market. And if you look at the interest rates, that justifies that statement. Interest rates have been falling since about 1989. So every single time there's been any hiccup across the economy, there's been stimulus there to prop it back up. So whether we have that now, I'm not so sure, because with inflation now, with interest rates pretty much at zero, we've got to deal with that. So there's going to be, I just don't think the market has the potential to come right back. And that's why, I think it's foolish to just tuck your head in the sand and think that, the markets always come back, because they always have in the past. Future results are not, past results are not indicative of the futures. And that's what I think we're kind of dealing with. So on the triple Qs, we broke back into this price channel here. So we are now back within the bull trend. Now again, this is a bull trend, right? So this is a bull market in the tech sector since 2009. And we are back now within that trend. So I would say this, basically based on Friday, elevates the probability, doesn't guarantee anything, but elevates the probability that we're going to head to the bottom of the channel. All right, it's not going to happen all at once. We've got really good support here at 300. So I think how it's going to work is we're going to fall to 300 and probably get a bounce, and probably bounce all the way up to the top of the channel. Okay, that's likely, and I'm just laying out hypotheticals, but this is how I see that it could easily work out. We fall down to the bottom, bounce to the top of the channel. That's going to be your bear market rally, your first bear market rally. And Qs, if you look at where Qs is at right now, down down 20%. We closed the week in a bear market in tech sector. All right, the broader market cannot survive without the tech sector. All right, it's just too heavily weighted in the market caps. Everyone loves Apple and Microsoft, and everyone's crowded into those stocks. And nothing against those companies, great companies. I think Google's one of the, I think they're amazing in terms of what they've done for, for society in general. I mean, you're able to look up so much information, but it doesn't matter, because the point is that markets will correct when they need to correct. All right, so I think that's going to be your bear market rally, rallying up to the top of the channel, and then probably roll over down to the bottom of the channel. But longer term, now that we're in the channel, the probability has now been elevated that we're going to head to the bottom of the channel. Okay, and just to kind of roll that out, we were in this channel since 2009. All right, that was a channel that we continued to remain in. Every time we fell below the channel, all right, we fell to the bottom of the channel, Fed stepped in. We fell below the channel in COVID. During COVID, Fed stepped in. They stepped in crazy, and they put us to the top of the channel. This is all manipulation, basically. This is not natural market forces. This is Fed intervention. And now we're back within the channel. So this is almost like a false breakout. Bigger picture, like a false breakout or a bull trap. So I think we head to the bottom of the channel and very likely break the channel. okay? I'm not going to put the probability super high quite yet that we're going to break the channel, just because, we don't need to worry about that. All we really need to worry about is where we go in the near future and how we're going to make money on it. And, I see us going to the bottom of the channel. All right, once we get down there, we'll look for sell signals to break the channel. And if they don't show up, it doesn't matter, we'll go long. All right. That is my morning diatribe. Now I'm going to get into some stock charts, guys. And then we'll wrap up. GPL. All right, so I'm done with this one, but you could, here's the thing. Let's go to the daily chart. All right, so this trade worked out 100% perfect, and basically we took the trade on the breakout right here. I pointed it out. We were kind of stalking this trade for a while. I kept pointing it out for a while, and it was on my radar, and finally it showed up, and we took it. It rallied from the breakout point basically about 60% in just 5 days. Great trade. I'm out of it. I'm no longer long. We've got resistance right there at 36. Now, yes, it could continue to break higher, and I'm not going to put it past that. I wouldn't short the thing, but for me, this is a penny stock. It's not something I want to be involved in longer term. So I just took the money and ran on that one. I don't see any indication that it's done going higher. If if you're still in it, I don't see any indication. But for me, I'm just not really that interested in being involved in this 34-cent stock. We got a home run hit, so just take it and run. Oh, you guys, MTA. All right, so I got out of this on Friday. Let me show you what happened. They smashed this thing on us at the end of the day. We'll see, but the thing is that I'm just not interested in being it right with the price action that happened. I kind of looked up and I noticed it, and I was like, I got to get out of this. They're smashing this. So MTA, you've got this downward price channel. Lots of reactions on resistance. We were above it here, and on Friday they came out and just some heavy volume just smashed this thing down back into the channel. So I don't like that price action. I don't want to be involved with this. I want to be involved on a breakout, a bullish breakout, but because of that price action, I just closed my position, and I'll look to buy it back. If we get down to the bottom of the channel, all the way down here, that's your next objective opportunity to buy it down here. All right. Or if we see some sort of bullish breakout, but that price action right there on Friday told me to get out of it, so I bailed. And that's one of those things that you just have to be watching the markets. But on Friday we were dumping into the close, so I just noticed it. All right, crowd strike. All right, let's look at CrowdStrike. Yeah, so on CrowdStrike, I've got this level here, although it's kind of chopped through it a little bit. Lots of reactions there. Yeah, I don't really see anything that I would be interested. Like, I don't know if I'd short this thing. You do have really big, there's huge negative divergence that's in play, going all the way back to back here. So keep that in mind. It's tried to break down 3 times, once, twice, 3 times. Yeah, I don't know. With the thing is that you always want to keep the bigger picture in view, and like I just spent time going over the bigger picture in tech stocks where the probability lies. So this is a tech stock. So I definitely wouldn't want to be long this, but I probably wouldn't short it either. I just don't see enough to short it. But that level is support, 168.52. I suspect it gives way, but you know, it's volatile. The Dow. I mean, we could look at the Dow. I don't cover the. I never cover the Dow because it's just a, you know, it's like a retail index. Doesn't really give me any broader picture, but all right, that's what I got on the Dow in terms of the trend line. We're in a downtrend. Lower highs, lower lows. All right, downtrend. Look at that. Look at that. There was probably, well, no, there's no divergence. Lower momentum on the PPO. And let's see here. Slightly bullish momentum on the RSI. But we're in a downtrend. I see no indication that that trend is over, so I don't know. Where do we go? There's a gap right here. Could fill that gap down here. I'd watch those levels on the SPY and the Qs. You know, if we hit that 300 area on the triple Qs, we'll probably start hitting support levels on the other indices as well. I just covered Qs, so AG. I like silver. Silver looks good to me. And I did go home. I did lighten up on some gold miners on Friday. I can explain why, but the silver miners still look good. So here's AG. We've got a bullish trend. Probably here. It's about right there. So tags of that support line or buying opportunities. You know, we had bullish divergence that was building. It's now starting to play out. We have a breakout. We're above the 200-day moving average. There's some resistance right there at about 1452. So I suspect we at least at a minimum hit that and probably get a pullback there. Maybe it'll look like this. Run up, hit that, pull back to trendline support, hold, and continue to rally. So I like it. Looks good to me. All right. IWM, yeah, maybe. But IWM to me looks like one of the cleaner charts. And I see no indication that we're not heading down to 170. I continue to think that that's where we're going to hit. If you roll out to, I was looking at the hourly. We had this slight flag action, and on Friday they started to break down. So I suspect we head down to the bottom of this recent kind of range we've been in, and continue to break. I'm looking for us to break down. We might, maybe we will, break up, but no, this is a big wall of buyers who are going long, and they're all underwater. So the more you go down, the more and more that these losses become unbearable, and it just creates more sellers. You basically have a bunch of sellers that are either selling or they will be sellers the more you go down, because they're taking on losses. And that's fuel, basically. We look at that, that's fuel to get us down to the next move. CRISPR, I don't know. Stefan, you gotta tell me what the symbol is. SQM. I don't know, is this a commodity, agricultural? This is part of the inflation trade. Nothing really there. I don't see negative divergence, you know. Look, momentum up. Price up. All right, bullish trend. And yeah, I wouldn't short the thing, that's for sure. So if you're long, I'd probably just stay long. I mean, rolling out, it's at all-time highs. So pull this down just a little bit. Looks bullish to me. It's a bullish breakout above the all-time highs. Came in for like a back test right here. Held. Looks bullish. Dell. Tech stock should go down. Excuse me. Below the 200-day moving average. I don't like this trend line. I think that was probably your trend somewhere right in here. To me, this looks like a big topping pattern, okay? So this all right here looks like a topping pattern. And it came with negative divergence, all right? Again, just take the course, guys. If you're new and you haven't taken that course, I'll go through all these concepts in full detail, and it's gonna give you the skill set. And that looks like a topping pattern. Again, each new spike high was a divergent high. And then it, look, boom, gap down, trapped all the money, bull trap. Right there, gap down, back tested 200, rejected it. This thing's going lower. I mean, I can't guarantee it, but as far as the chart tells me, it's going lower. All right, there's some support right there at 46, but likely heading lower than that. But you know, you'll probably get a little reaction there. Some support right here too, it looks like. Support zone basically, but there's some support at 47.85. But the point is, I don't think you're going to get back into this range right here. If you see it back in here, then maybe I'm wrong, you know, because that would give the bulls who are trapped an opportunity to get their money back. And you usually don't want to see that in a topping pattern, you know. You want to see that trap where it's trapped them and it starts to head lower and creates, you know, they become sellers. You want me to put a list of 10 to 15 list of stocks to buy when the washout happens? I mean, you know, a lot of that's fundamental analysis. If you want me to put a list together of stock, you know, that's not really what I would do. You know, I mean, pick those big companies. You know, those FANG stocks. They make a ton of money. They're cash. You know, they're cash flush. I don't know. I can't really give my advice or opinion on any of that, but the technicals will be our guide, all right? They'll tell us when to buy certain things, and that's, you know, they'll tell us when to go long. Again, the news headlines, everything will be in disarray, all right? You know, you will have, you know, in a bear market, things are going to break, and you're going to see companies go bankrupt, and you're going to see everybody, you know, whining about their 401k, and, you know, the masses will be upset, and the news media will be all, you know, will be doom and gloom, you know, because they talk, you know, they basically put out news for retail traders. So the news media, all they try to do is get you to watch, and if everyone's feeling pain, they'll, you know, They're going to talk about that, and so that's when we're going to want to look for longs, is when everyone's, when the whole market's been bombed out. UEC. All right, let's take a look at that one. Uranium commodity. Bull trend. Looks bullish to me. The reason why is you look at the PPO, it's just pointed straight up. The RSI started to turn down, but we don't have a divergent high, all right? So it's lower than that previous high, but so is price. Probably going to head up to the top of this channel, and I don't even love this channel up here, to be honest. Maybe something like that. I don't know. But this thing looks bullish. Although we're right there in the middle of the range, so if you want to narrow it down, and again, whenever I narrow it down, you kind of reduce some of the probability, the smaller the time frame. Right here, like, look, I've only got 2 data points. 1, 2. So I can't really make that as a trend line. So it's not something I'd really fall in love with. Kind of in the middle of the range, I would just be interested in buying it at support. You want to pull back to support is where you want to buy this thing, unless something changes. Boeing. I mean, look, Boeing is bearish. It's in a downtrend. Look, we're making lower highs, lower lows. Even with all the, war stuff that you hear about, which is basically just a sideshow, they're trying to pin the bad economy on and the inflation on this war narrative. But if you look at any of these charts, all the commodities had all started rallying. Oil was clearly in a strong bull market before any of this happened. It's a sideshow. So yeah, I see, there's a gap to fill, so we're probably going to go fill that gap. $159 is probably the next level of support. Okay, SOXS. Well, I'm short SOXX. I am short that one. So SOXS is the leveraged play. It's essentially the same. What I would do, honestly, if you're long this SOXS, then you are short semiconductors. What I would do is not chart this one because it's leveraged. What I would do is chart SOXX, the non-leveraged one. And when you hit support, then that's likely where you're gonna, hit resistance in that other one. SOXX. We closed on Friday right at support. Okay. So it's basically right there at 433-ish, 433.50. I suspect we get a gap down on Monday and, probably sell down, but it's a little hard to say, but, that's where I think we're heading, down to about 388. So just chart that one. And, when you hit support on this, then you're likely going to hit resistance on that other one. TBT. Which one's that one? Oh, Treasuries. Oh, that's like TLT. It's a short on TLT. Yeah, it's just, I don't trade bonds because there's just not a lot of money. They just don't move that much. But good to watch for interest rates and just bigger picture stuff. I mean, you have some negative divergence right there. So yeah, I mean, this could go lower. If the market sells off, you're probably going to see traders run into bonds for safety. All right, so ITI. No. Well, no bullish divergence. Look. Bullish momentum, bullish price. Okay? That's not divergence. Divergence is opposite, right? This is like convergence, basically. But no bullish divergence. Big gaps to fill. You did fill the gap right there. So that's probably why you're getting this bounce. Another gap to fill down here, which is where I suspect it goes. I see a bear flag. There's your flag pole. Your flag is going to be something like this, and it's probably going to fill this gap, but do that. Measured target is about right there, which, if you look, there's a gap right here, so that's where I think it goes next, right there. 74.35-ish. Okay, moving on. What's XL? Trucking, maybe? Bullish divergence on both momentum indicators. Bullish breakout. This is a long. Kind of tighten that up a little bit. And I guess we'll go right there. Yeah, about right there. All right, all the tags of resistance, and then breakout. That was your buy signal. That's your that's your buy trigger. Breakout, back test. That was another objective area to buy long. All right, that's how I would treat that one. Likely going up to, I see some resistance right up in here. Yeah, up there at 529. All right, that's what I would expect. I like this one long. I wouldn't buy it now. You know, for me, it's all about entry right at the key levels. That's what limits your risk. All right, because this could backtest again. It could do that, you know, and then go. So I don't want to ride that out. But if you're long this thing already, that's the position that I would stay with. And if you're not long, you know, you make the decision. You do what you want. But for me, I buy it on the bullish breakout or the back test. That's where I want to position at. So that if I am wrong and it, you know, sells off, I'm wrong small. All right, that's part of the risk reward and kind of managing your risk. AG, I think I covered that one, didn't I? Yeah, I already covered that one, I believe. Bullish, I like the silver miners, they look good. Guys, drop me a thumbs up if you haven't done so. We got 100 people on the channel, on the live stream. Do appreciate you guys joining. And if you guys are new and you haven't taken my course, it's well worth the money, I'm telling you. It's going to help you. I do, it's no BS course. It's basically a lot like my videos where I just, get right into the information that you're looking to learn, and, I give it up. So it's part of, it's a $99 course, 5 to 6 separate videos going over each individual concept. I put together a checklist, kind of a trade analysis checklist that you can use. It's just things that I do mentally, so I just kind of broke down how I approach trading and just laid it all out in that course. So check that out. It really will help you. This strategy that I teach, it works. All right, it does work. You got to have patience, and you got to, I can't manage your emotions, so I can't control that, and you do have to work on that. That's something that just comes with time, but that's why I put together that checklist to help with that. If you guys use that checklist and really check things off, then it will help control your emotions and get you into the trades that have high probability of winning, and keep you out of the trades that, or the investments that just continue to dump on you and tank. Most retail traders, what they do is when something's going up, they buy it and they're happy, and when something's going down, they panic and they get out. They don't know anything about, risk management or anything like that. I'm doing a video. All right, so check that out. Let's go through a couple more, guys, and then I'm going to wrap up. We will hit all-time high next month. Well, I mean, that's not what the charts tell me. That's just a hopium statement. Tom says I'm a perma bear and we're going to hit all-time highs next month. Guys, if you've been following me for a while, obviously, yes, I have been bearish for a while. But again, I started my channel in 2018. All right, that's when I started the channel. And look, the chart is a bull trend. Here's the S&P 500 going back to 2009. Bull trend, all right? Bullish trend. 2018, we broke that trend. So it's not, I'm not just like bearish for the sake of being bearish, all right? I started my channel back when we broke the bullish trend. And this is where I thought that the bear market was going to start. And then the Fed stepped in, all right? Fed stepped in here on Christmas Eve. They stepped in, they reversed their interest rate hiking, and they started cutting interest rates, all right? So they created this 2019 rally. So years have gone by, but this is what's in play. So there's the Fed. Then, again, I shorted right here. Why did I short right here? Nobody would short right here. Let's just put it that way. Few people, if you were following my channel, nobody could believe that this was going to happen here, because 2019 was a pretty bullish year, and I was shorting right up there, all right? So I caught the COVID crash, all right? Most people didn't catch that, and that's just the nature of short selling. And when you're shorting something, you're always going to be the minority, and the masses are always going to be long. Retail's always going to be long. Again, it's because their 401ks and where they put their investments are bullish. Show me a 401k that can short stocks. It just doesn't exist. So retail's always long and always perma bullish, basically. All right. And then what they do is when you have big sell-offs, they basically cry and whine and hope. That's kind of how it works. Or it's the denial phase, basically. It always come back. Well, 2020, it did come back, all right, because the Fed stepped in, all right? So 2020 created this massive rally, which, yeah, I didn't catch a lot of it. We got some of it. I caught some in the gold miners, and, I actually did go long down here at the lows. I just didn't catch the whole long move. I caught some of it, but admittedly didn't catch it all. Now we're starting to roll over, and we're barely off the highs. And we're below the bull trend. I don't know, I don't see, we could go up and make new highs, but it's not in the charts right now. And the Fed's not there to save it, all right? Have you heard the Fed say anything? No. Now, the Fed's going to try to, if we get down here at 339, you'll start hearing things about the Fed, but what are they going to do? Are they going to pump a bunch more money? They might, but if they do, inflation's not going away anytime soon. So again, that's, I'm building a logical case. And if you say that we're going to be off to new highs next month, what's the logical case of why we're going to be, why are we going to be up, at new highs next month? Because the chart doesn't show me that. The Fed's not there. I don't know. That's the thing. Bulls always say don't fight the Fed. Like in a bullish trend, don't fight the Fed. You hear that? As soon as the trend turns, they and the Fed's saying they're going to hike, they just forget about that statement. Oh, don't fight the Fed. Well, don't fight the Fed. Use your own words. The Fed is wanting to hike rates. PLBY. Yeah, not a lot of history here on this one. Bearish momentum. It's not a divergence per se, but it's bearish momentum, bearish price action. I guess it's in a downtrend. Lower highs, lower lows. Couple more guys, and we're going to wrap up. Apple. So Apple's been one of the stronger stocks, and it's the largest company. So you see this thing sell down, and it's just going to be another sign that the generals of the market, the strength in the market, are starting to sell off. And when you see that, it's just another nail in the coffin for a bearish case. Now, I can't say that Apple's broken its bullish trend yet. We do have a bull trend right here. So that's trendline support. We got the 200-day. We're probably at a minimum going down right here, down to about 148.67. You'll see a bounce there. Most likely the algos are going to step in and buy it. But, I do think we are heading down there. The other thing to look at is this is a bearish rising wedge pattern. We broke to the upside, and we've now failed, and we're selling down. That's a pretty bearish week right there on Apple. Closing the week down. Let's look at the daily chart. Yeah. So again, the 200-day and that support line is right there. I suspect it gives way. The 200-day, and I suspect we head down to this support line. Again, look at this bullish price action. We're almost right back down there. So they bid it up, selling down. So we are in a downtrend. All right. I'm looking for lower lows now, down to this level. I marked it out. It's about 149. If we break that, it's probably going to go like this. Bounce. Probably bounce to the 200-day is what it'll do. It'll be like this. Break, bounce to the 200-day, back down, chop around a little, and then break. All right? That's what I suspect it does. And then if we see that, it's, we're going to head lower. KTRA. Well, look, guys, if you follow my trading strategy and you take my course, I wouldn't, I don't stay in big positions that just lose big. All right, so you'd be out of that with a small loss. You lose small, but that's the thing. That's another skill you have to learn to master, and that comes down to the emotion thing, is being able to take a loss. Most retail traders, they just have to have 100% accuracy, 100% winners. Everything has to make money, and if it's a loser, they'll just, dig. They'll make a stand and just hold it until it becomes a winner. That's not the way to do it. You want to get out of trades that are losing, lose small, move your money into things that are winning. All right, and. That's how institutions trade. Institutions can't just buy some position that loses and just hold it, and every quarter report losses. Look at Kathy Wood. I mean, that thing's such a joke with Kathy Wood that they keep putting her on TV, but her fund is down massive. So don't confuse brains for a bull market, guys. Everybody thought she was some genius, but she can't avoid the losses, so she's not a genius. She just rode a Fed mania, and when everything went up, this one, yeah, you got some support maybe down in this area. This isn't that clean of a trend line, so you might want to tighten that up a little bit. Yeah, I don't know. I'd have to really probably get into the hourly chart a little bit, but it's somewhere right in there. I think there's a trend line, so we're probably going to go down and hit that. And you got a new low right here. You do have some bullish divergence, so I don't know. Probably going to run down and hit this trend line, and what you want to do is just play around with this to get a lot of reactions on that trend line, but it's somewhere right in there. You might find some buyers. Again, it's 33 cents, so I wouldn't look at this thing. I mean, this thing could go bankrupt. All right, I wouldn't mess with this, guys. This is not a stock that I would mess with, and I definitely wouldn't hold it. I mean, it's $100 to 33 cents. Might as well be bankrupt, right? This thing's bust. All right, moving on. All right, I'm going to do two more and then wrap up. We'll start off with X. Breakout, bullish breakout. Let's see what we got here on X. All right, so there's a downtrend in X. This goes all the way back to 2008. So this has been in a bear market. And this is a commodity play. Commodities have been in a bear market. There's a bullish breakout right there. Look at the momentum. All right. Boom. Bullish momentum. Bullish breakout. This is bullish. I would not short this thing. I would want to be long. I don't want to be long way up here. Obviously, I'd like to buy it on the breakout or a back test. All right, so if you get that back test, that's the best area to buy it. But this is a breakout, so bullish. Should go higher. And I would just look at, there's a level right there. That's a good target for the next leg up, which will be about 47. We should hit that, and you're probably going to go higher. All right, this isn't a new bull market, as far as I can tell. Next. All right, we'll wrap up, guys, with BAC, Bank of America. I am short the financials, everyone, so just full disclosure. I'm short XLF, so I'm shorting that ETF. Looks like they tried to save that thing, Bank of America. So we've got this trend line. It's right here. There's your COVID lows. There's another reaction right there, and we're getting a reaction here because you broke down and then you recovered it. So at support, if this breaks, it's probably the real sell signal, but you can see it's at support, and that's it. It's at support. It should hold, but if it doesn't, that's the sell signal. I think a lot of the time what you'll see, at least recently in the market, is you see kind of a breakdown and then a recovery. I think what's happening is if you have big institutions, this move here, then they recover it. This gives them an opportunity to get out of their positions without taking on huge losses, and then retail, takes the bag. So again, you always want to look at what's going on there, but I do think that is what's going on, is the big institutions get out, and then it breaks down. So the next sell signal is probably the real deal, but it is at support. no divergence, no bullish divergence, bearish momentum at support. So, we could bounce up to here, maybe right up to there. But look, this is kind of a bearish rising wedge pattern right here that it's building, and we're just right there. So I think we're going to break. All right, maybe on Monday with the gap down. The next break of that should be the real deal sell signal, and we're probably going to head quite a bit lower. You've got this high right here, your pre-COVID high, so that's probably the first level of support. Maybe right around 35.70. Bear markets don't crash, all right? So if we're going to enter a bear market, it's not going to go like that. It's going to go, it follows the slope of hope. So what it does typically is you sell down to the first level, and then you get a bear market rally. But then that gets sold into, and eventually, you break down to the next level. Okay, and then towards the end of a bear market, it crashes. All right, and then that's usually the end. So we look for bullish setups, after we see that big crash. That's all I got, guys, for today. Everyone have a great weekend. I'll catch you guys on Monday. Thanks for joining. Drop me a thumbs up. Check out the course. It's a good value for you guys, and I'll see you guys next week. Bye.